Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, August 3rd. Hopefully you had a great weekend. I did go hiking up in the mountains a little bit with the family and also went to the local theme park here. JB was on the move this last weekend. Hopefully you were too. You're not surprised with the green shirt, are you? You knew it was coming, and our favorite shirt is here, and it's National Green Shirt Day. Hopefully you're wearing yours. We got Michael Fairborn in the chat. We welcome him, and we welcome all of you here today. Josh Pink, hello back at you. We also got with us Texan, Will, Gary, Janelle, and also Guten Tag back to you. Greetings from Grand Rapids, Willis and GR, welcome to you. Hello, Rick, Jay Richardson, and many others. Hello. Now, just real quick, this class is kind of more of a two-way conversation. It's really not meant to be a lecture because I don't give lectures. So as you have questions, just go ahead and fire them away, and we'll see if we can answer them as many as possible. Now, just real quick as we get started, we're talking about trading with technical indicators. We'll talk about that in terms of stocks and options. When I talk about the information here and give that information, understand the information is given for general informational purposes only. Our examples will be stocks. Sometimes they might be options. Remember that options carry a high level risk, not suitable for all investors. When we talk about examples, we will do those on the Paper Money software application. And we do that for educational purposes to learn the strategy and using different indicators and so on. Understand that investing involves risk. Without risk, there's no reward. So we need to kind of be thinking about what is that risk I'm willing to take, okay? And that's a part of the process. And also understand that everyone's risk tolerance is different, and it also might vary upon time or over time. Also, when we talk about examples, we do have other different types of things that we do, such as the in-person events. We're going to be in Orlando this weekend, August 7th and 8th at the Gaylord Palms Resort. That is a two-day event. First day, technical analysis. Second day, option strategies. New York, okay, calling all you Knicks fans. I grew up in upstate New York. Okay, now the advanced options, that's the 28th and 29th. That's at the New York Marriott Marquis. And also back at you in Scottsdale, Arizona Cardinal fans, September 19th at the Phoenician. My gosh, if you've never been to the Phoenician, that's a good place to be. Okay, and that's a one-day event. That's a market drive event. So different types of events in different parts of the country. You don't have to be living in the area. You might be traveling in the area for fun, etc. Join us. You can go right to schwab.com/events. Go to that page so that way you can see other events that are happening until the end of the year. There is also an event in Honolulu as well. Now, just real quick as we get started here, I want to hop right in and just take a look at the markets first off. Now, I want to ask you a question as we get started here. Tell me how you read this chart, okay? Now, one of the things that we've been kind of talking about for weeks now is kind of looking at four barometers of risk taking, okay? Number one is looking at the VIX. When I say risk taking, I should say even maybe bullish or bearish sentiment, if you will. We look at the VIX, we look at actually crude oil, we actually look at the interest rates, and we look at the US dollar. Historically, if we saw all four of those going up, let me repeat, VIX, crude oil, US dollar, and the interest rates, if we saw all of those or the majority of those going to the upside, the chances that the market was going up was not that high, okay? Well, if you look at the SPX, tell me how you read this, okay? The SPX, if we look at this on a daily chart, 1 year daily that is, we kind of saw that those moving average lines, they've been red, and they've been red for about 2 weeks, okay? Really, what was a Thursday, specifically Friday, started to see a crossover, and then today, gapping to the upside. Now, this would lead us to believe that upon those four gauges we look at, the VIX, this is why some people like to short the VIX, okay? We talked about that on Friday. The other thing, we have to understand that one way to be short the volatility is to be long equities, some of them that are going up, okay? Second way we could actually do this is maybe through a bullish strategy like cash gift puts and so on, okay? VIX here, down, back, smash down to support. Again, 15. Now remember, you like to see that VIX dropping down. VIX dropping down usually unrealized profits or balances in the portfolio could be going higher. Does anyone like that? Tell me who you are. Now, so number one of the four, that's dropping down. That's usually bullish. We just said that. Crude oil. Now, if you look at crude oil, remember, if we see crude oil going down, we're probably thinking, well, that's one of the four. That actually could be bullish equities, okay? Meaning, as consumers, we're not spending as much money on, let's say, gas, diesel, and so on, natural gas, among other things. We might actually use that to actually go buy something else besides just fossil fuels. And if we look at that going down, we're also probably thinking that the airlines could be going to the upside. United Airlines, Delta, among others. Just look at them. Now, if we take also a look at, let's say, the other one, the interest rates, we'll look at just TNX colon CGI. The rates has gone higher. So that's one of the three that we've seen so far that I mentioned. That going up steeply, that's not the greatest thing. But the last one is just kind of keep an eye on the US dollar. And that US dollar has actually been dropping down. So really right now you have three of the four, the majority, in the favor of equity investors right now, okay? So you want to see the majority of these dropping. They are one of the four, the rates pushing to the upside. And by the way, that's not necessarily a horrible thing. If you're sitting on a stash of cash, okay, seeing those interest rates go higher and you say, I got some cash, might be able to potentially get a higher rate of return on that cash. Okay, so it's not all bad. So the equity investor has something to work with here, whether they're buying stocks, maybe considering maybe derivatives. Third, if actually someone says, look, I got some cash, the rate did tick a little bit higher. Geez, looks like some opportunities here. Now, are there any questions here? Okay, now one thing I want to kind of bring up just real quick when I look at the others, we mentioned the S&P 500. Let me go back to the S&P 500 and just show this on the weekly chart for just a moment, okay? Now, last week we brought up the S&P. We were looking at charts on the daily chart and the weekly chart. And when we looked at many of these charts on the weekly chart, they really look like an ascending triangle on a weekly chart. They really did. Now, when you pull this back up, and we'll show that on the chart that we show this is the fifth chart in. This is the chart we're talking about, okay? The SPX on a 3-year weekly, looking at a 10-week moving average, exponential moving average that is, and a 30-week simple moving average. What you're going to notice is on these weekly charts, we've been really having the shallowest type of pullback, which is depicted by only getting orange colored candles. Now, hallelujah, okay? Because when we get that, that means the pullback has not been able to close on a weekly basis below the 10-period moving average, thus causing purple color candles. So remember, if you're a bullish investor and you're saying, look, I want shallow pullbacks, you're looking for orange only, okay? And so far on this weekly chart, that's all we've been getting. The keyword is so far, and those higher lows, which they take time, okay? They've actually been increasing. Now, could this week be the week where we kind of jump over that area of resistance? Now, I'll just fast fire when you look at, let's say, the NASDAQ itself. The NASDAQ has actually pulled back deeper, noted. The Dow Jones, if we look at that weekly, that has not pulled back that much. And if you look at this, so far, today being Monday, we're actually closing above the high of the low week so far. Getting a little bounce here, depicted by that green dot. And if you look at also the last one, Mr. Russell, that has also not had much of a pullback either. The old high showing the new low. So it's kind of interesting so far to start. Now, I just want to kind of make mention of, last week we talked about value and some income. You know, really at the tail end of last week, I'm going to say it was probably Amazon's earnings. Okay? That one, among others, let's go to that area for just a second before we look at our trade examples. The crashing to the upside, okay? Let's everyone just have a moment of silence for just a second, okay? Because we know that this has a big impact on what? Sentiment, right? Among other things. Now, I know I'm not looking at the chat, but if I was looking at the chat, I would probably say someone's screaming at me target. You don't think I already saw it? Okay, come on. So the big actually thing is when you look at Amazon, we know that this is a big chunk of the discretionary sector. So if we looked at the discretionary sector, it wouldn't be a big surprise. Now, we'll talk about Amazon just a second. IXI, though, there she is. 22% of actually the discretionary sector is Amazon. You get a smashing to the upside, like on Amazon, here comes the discretionary sector. You don't have to buy the stock. You might consider buying the sector, okay? Now, I do want to make mention of the other one that I made mention of on Friday. Now, on Friday, let me send you this post. You said, James, I did not see this post on Friday. Well, I want to make sure you get it because there was actually something that I posted on Friday. Dean, I knew you were there, buddy. I knew. We know you're on it. And here's the deal. On Friday, on my X page, my handle is @JamesBoydCS. I said gap down bullish reversals. What are they? Be on the lookout, seeing a lot of them right now. Now, this is going to be the template of our class. When we talk about this, stocks that have broken down, that can be caused by downward trend, downward momentum, they don't always go down forever. That's just like stocks don't go up forever, okay? But what I talked about really on Friday was really talking about stocks that started to show some of the bullish momentum back by price getting above the short-term moving average and resistance and maybe trying to get inside the old channels. This is going to be the template of what we're going to be talking about here today, okay? So if you said, James, I didn't see that, well, make sure you watch that, okay? How long is it? 2 minutes and 33 seconds. Now, let's talk about this. Now, I'm going to use the example. Let's kind of start with Google. Now, we know that Google is in the area, it's in the sector of communications. When you look at, let's say, the communications, let's pull this up. If you're not aware of this, I'm going to pull up the S&P 100. Let's go to communications. The communications, which would be pretty easy to see, of the S&P 100, you'd pretty much just say the sector is two stocks, Google, okay, and Meta. And the other ones, not so much. Now, if you look at the S&P 500 communications, it is pretty much two stocks, Google and Meta. Now, we're going to go, now, by the way, the communications, you could say, is tucked underneath the area of technology, of course. Now, if we go to the chart for just a moment, you're going to see what we talked about on Friday on that video. Now, we could have said, oh, yeah, too late, okay? So if we look at this, we saw that the stock, we always talk about the gap down. And when you gap down on a red candle, what becomes resistance? Type it in the chat. Well, what should become resistance on a gap down, if it's a red candle, it should be the open of the red candle. Now, wait, if the price gets above that, that resistance isn't holding. If you break a level of resistance, the path of least resistance to go to the next level of resistance, okay? So all of a sudden, we broke the 321, and we floated pretty quickly in about a week to about the 341. Well, if you fill in the gap, if we get to the 341, what's the area of resistance? The old support above that. It was 350. Well, we went there too. That's where we were on Friday. That's when the video was made. Now, you might look at this and say, well, geez, if we get to the 350, what was the old resistance above that? Who's the 373? Now, we could have said, well, James, I have X and I didn't see the video, blah, blah. It doesn't matter. We're not talking about where we were on Friday. We're talking about where we are now. Now, when we look at this, we gapped up again. We gapped up and we rallied up to the area of resistance. Now, you take a look at this, we got to ask the next question. If we can get up through the 373, the next level of resistance is fill in the blank, type it in the chat. Well, that next level of resistance, think old support. Well, it got some support right around 385. And if we said, what's an area of resistance potentially above that? Maybe, let's say in the ballpark, let's say 403. Now, could Google somewhat be linked to the mass explosion that happened on Microsoft, where some of these big mega cap names, the Magnificent Seven, if you didn't see those, shame on all of us. The Magnificent Seven have exploded actually. Let's pull that back. On Google, go to Microsoft. I meant to say Microsoft too. When you look at the Microsoft, this is what I'm talking about. Some of these big names, like whether it's Amazon, Microsoft, Google, some of these big mega cap names just firing back to the upside. Now, let's kind of pull back up Google, okay, for just a second, okay? So when you look at, let's say, Google, we're thinking that, hey, maybe we missed it. Maybe we did, okay? Now, here's the deal. If you make a high, right, what could come next? Well, if you make a high, the higher chance potentially is to make a higher low. You made a high, you make a potential higher low, well, that's shorter term upward trend, right? Now, let's go back on the weekly chart. Some of you might be thinking, what does this look like on the weekly chart? Well, let's pull it up. On the weekly chart, this is what we look like. How far are we above? We'll show that in just a sec. This is the weekly chart. So on the weekly chart, it kind of looks like it's really like your diagonal breakout, okay, potential. Okay, those are the lines we drew on the previous chart. That's the weekly. If we actually pull this up on the moving averages, we're at the 7% line, slightly above the 7% line. 7% really being at 370. These are moving average envelopes. We're trying to gauge on a percentage basis how far we are above the 10-period moving average, which is depicted by the light blue line. Now, when we pull this back up, we're going to go to this chart, and we're not going to put all the capital in at once. I said last week, some of the homework assignment I want you to practice is spreading out your entries, because when you have volatility, you're probably not just going to have one entry. So what we're going to do in trade number one is we're going to right click on the chart. We're going to buy, but we're only going to buy a half position. Okay. Now, could we use those envelopes as maybe a gauge to maybe we're going to try to do the buy limit? We could. I'm going to do buy custom with OCO bracket, and I'm going to put this right in the pay money account so we can follow along. I'm going to actually put it right there, type in Google, and that way we can follow it. And what I'm going to do is let's go back to that first chart, and we drew the lines before. Okay, now what I'm going to do is I'm going to right click on the chart. I'm going to go down to buy custom with OCO bracket. Now that target, what we're going to do is we're going to see, we don't know. Anytime you put on a trade, you have an expectation. Doesn't mean it's realized, right? If we actually go back and we say, where might this try to go to? We're going to put about 395. Okay. Now what I'm going to do is I'm going to take this gap down, where we gapped up to, and I'm going to use that as a place where we could try to set a stop. Underneath that level, we're going to set a stop by about 2%. That's going to give us 357.70. So when I type that up in there, 357.70, dated GTC. Now remember how the stop works. If it goes to that price or less, sell it at the what? The market price. Okay? So what the risk is there, it's a trigger to be sold, but we don't know where it's going to fill at. The limit price is saying sell at a minimum of 395 or higher. When you're a seller of something, you always want to get as high as possible, right? The lowest you're willing to accept is 395. If it gaps up to 405, could it fill hot? It could, okay? But we're saying no, don't sell any less than 395. Now, when we go back to the position size, we put this in. I'm going to put about, let's say, example given, 3750. 3750 is going to be about how many shares of stock? 10 shares. And remember, let's say that's a half position. I'm going to come back, say confirm and send. We talked about the stop. I'm going to send the order, and it's sitting right there. Now what I'm going to do is I'm going to put that second, let's go back to the moving average envelope. The moving average envelope on that, where was that? Let's go back to that chart. The moving average envelope, if we said, look, we're going to try to buy it, let's say this morning's open price, I'm going to put a limit right around 365-ish. Okay? So if we come down to maybe the bottom of the channel, we're going to try to buy some more on that dip in the price. Now remember, what was that target price? What do we do? What, 395? The stop actually before was 357.70. I'm going to put it right there. Now, again, if the price is actually going, if the price drops and we say buy 37.50 more, which is a half position, what should that allow us to do? It should allow us to buy a little bit more, okay? And you're going to see it's about another 10.25 shares. Now, the comment was from 2671 is Google looks like it's near resistance. Let me be crystal clear. The reason why we're buying it up near resistance is because we don't think that's going to be resistance, okay? It's the same idea as someone saying, why is the investor buying shares of Amazon at the current price level? Well, they're buying the shares of Amazon at the current price level because they're thinking that if the stock, the steeper it goes into the area of resistance, the more you gap up and you have large, big candles, and it doesn't necessarily have to have above average volume. If it does, it just maybe more of an impact. We're just looking at the steepness of the price, the size of the candle. Are they green candles, which means the closing price is above the open? And someone could say, as of this morning, I would never buy Amazon up at this. We're up in the area of resistance. Remember, the steeper you go up, the size of the candle, there's a closing price above the open, which will be a green candle. That probably tells us that resistance, which has been historical, might not be the future. Same thing potential with Google. Does the investor know that for sure? No, they don't. That's why they position size. That's why they set a stop. Okay? Now, if we go back to, let's say, Google for just a moment, when you look at Google and we drop that back to, let's say, maybe a 3-year weekly chart, if you will, or just even use Fibonacci, the whole idea is just trying to reverse that downward trend. Now, we've kind of seen this before. There's been prior times where you had a high and then you dropped and then you rallied, right? You had a high and you dropped and then you rallied. You had a high, you dropped, and then you rallied, dropped, rallied, dropped, rally, question mark, right? So we're looking to see, could it do the same thing again? All right. Now, let's also go back to just real quick Microsoft for just a moment, okay? Just something real quick on Microsoft. Now, last week, I believe it was on Thursday, we did a trade example of that, okay? And what you're now going to notice on Microsoft, it is kind of gone through the 430, gone through, or it's actually gone up past the 470 or so. And now what you're going to see in this case is it's even up at the 409, okay? So remember, the steeper it goes up, the size of the bullish candles, are they green candles? Those are all signs that maybe lead us to think that maybe the resistance is not as strong as we thought. I'm going to go back to just real quick target. Up until now, we've talked about horizontal resistance. But remember, the resistance on Target has not been horizontal. It's been diagonal. Right? That's not a bad thing to have because that would actually mean that there's more of an upward trend. Hallelujah. Now, what you're now going to notice is Target, notice what happened. It ran up to resistance and it pulled back. And as I take these lines forward, I want you to tell me how you're reading this chart. Okay? So now what you see is it almost pulled back to the bottom there, rallied up to resistance. It's still in the channel. Then it pulls back for how many days? 1. Leaves a lower shadow for Lisa Jack to see, right? And then it pops above the top of the channel. Now remember, old resistance might not always be the new resistance. Okay, now, could that old resistance be new potential support? Could. Could we actually maybe take this as the first level support and maybe the midsection of this channel as maybe the secondary area support? That's the idea. Now, a lot of times it's like we think that this resistance is like an electric fence. Now, I know how that feels. I was at Cornell University right by the equestrian park. I thought the electric fence was off. I grabbed that electric fence. If it wasn't for my good friend Scott, he might not be here today. I grabbed it. I couldn't let go. It was that strong. So sometimes we think that's what the resistance is. And sometimes, we don't know if it's really, is it really resistance or is it softer like Jello? Well, here's the deal. If you have a bullish market, if you have a bullish sector, and if that sector or industry group, the stock that you're looking at is one of the bigger names within the sector, that resistance might be a little softer than we think. Okay? Because people are actually, or investors, they're playing the stocks that have the higher percentage of the group of the holding of the sector, because that's probably where the liquidity is. Okay? Now, what I'm going to do is, now, Dean, do we have your permission here? Do we have Dean's permission to add to the position? Yeah. Yeah, it wasn't that funny when I just grabbed. I was like, man, I'm just gonna grab this and hop right over. I didn't hop over anything. I mean, I literally, it was tough. I admit, it was in a horse farm, okay, up at Cornell University, Ithaca, New York, and it was definitely ramped up for horses, okay, and I felt every bit of it. Now, if we take a look at this, we're gonna go back to the paper money account. Let's go back to the trade tab for just a second. We're going to send that second order just real quick on the Google. We finished that, but we'll send it. Okay. I had the first order for some reason rejected on the IRA. We'll send in the margin so that way it fills. Remember how the stop works. We said that. I'm saying it again. It's that price or less. Send the order. Now, the one thing that we do need to make mention is if you're trying to buy at this price or less, most likely or highly likely are not going to do a day order. It's going to be a GTC. So I'll change that, confirm send. Okay. Now, I actually should have put that in the margin account. I will fix that. Now, I want to go back to Target for just a second. I want to double check the position. Okay. The position is shares of stock, 153. 100 of those are spoken for. Okay. Now, just while we're here, one way to get more bullish is what? How could you get more bullish? Well, we kind of already said one thing. One way to get more bullish is add more shares. Okay. Another way to get more bullish is buy the callback. Now, wait, when you buy that callback, what are you really doing? You're ripping up that obligation to buy the shares at the strike price. You're saying, look, I'm not going to agree to sell someone these shares at 150. Now, if we sold that call for 390, that's what it was sold for when we did it. Now, if that call has appreciated, that tells us the stock has gone up and it's not going to be as cheap to buy it back as when we sold it. Because just because we sold it doesn't mean the option stopped trading. And that's what's happened here. This is what we sold it for, 390. This is where it is now. So if I want to rip up that obligation, someone on the other side who might have been long the call, they're sitting on a gain of 220. We're losing 220. Now, don't feel like we're complete losers here. The gains are in the shares. Okay, $2,000 there, but $220 we're down for a net grand total of $1,811. Now, what we're going to do is one way to get more bullish is buy the callback. Right click, create closing order, buy the callback. Now, if we buy the callback, I want you to notice what should the delta do. Delta is showing us that the stock goes up or down. Goes up $1. Approximately how much would this position be up? Stock goes up $1. The position should be up about $102.62 approximately. Stock goes down $1. We should be down about $102.62 on the first dollar move. Now, if we say create closing order, we buy this back, and I'll just try to get filled at the 615, the mid price, watch that delta. I got to actually cancel that stop order. There's a stop order on there. Let me just double check. Yeah, it's not, no, that's on the 53 shares. So that should be fine. Yeah, it looks like there's a stop on that. Let me just cancel that for just a sec. There's only on the 53 shares, so put that back. And by the way, sometimes we always think that the investor has to add shares. That's not always true. They might have a cover call. And if that stock's breaking resistance, one way to get bullish, if that is purchased back, that's going to add about 50 delta to the position. So instead of 102 delta, it'll be like 152-ish or 3 delta. That is one way to get more bullish. Now, let's assume that you did not have that position, okay? And I'm going to just try to get filled at the high side so we can see this order get filled, if we can. That delta right now is going to go to about 153 because we do not have the sold call anymore. It cancels that order, and we'll see if that fills. Now, let's imagine we didn't have the position. We just said, look, I'm just looking at this now. And what I'm going to do is back on that target position. Okay, so now it fills. Now, right when we're not looking at it, okay, there it is. So 153 shares. 153 shares, another way to say 153 delta. Delta, the profit or loss if we go up or down $1. We go up $1, $153 unrealized gain. Down $1, $153 unrealized loss. Okay? Now, think of the rate of change. Now, if we take a look at this, we look at the target, I'm going to right click. Now, we might say, well, James, we're at the all-time high. Well, yeah, okay. If you just made a high, that is confirmation of what? What is the confirmation of? Well, if you bought something that's at a high, it's the confirmation of an upward trend. Okay? A lot of times people think if it's at a high, it's horrible. Not necessarily. Okay? That's like saying someone wins the Super Bowl and you think they're horrible. Okay? They just won the whole thing. And we're asking ourselves, could the trend continue? I mean, think about this, right? Let's say a basketball superstar made $100 million last year. Does that mean they're at the top? Well, one year next year they make 120, and the next year after that they make 130, right? We always think it's something more in our mind that the high can't go higher. Okay, might not necessarily always be true. Okay. Now, what I'm going to do is on this, I'm going to right click on the chart, buy custom. We're going to go with those. I'm going to go with stop. If we go with stop, what I'm going to do is say where was kind of some levels of support. Well, the old high, you notice that little pattern right there? The old high became the new what? The new support. Then you actually, and that's where we bounced. That was Friday's low. Then we actually had another high again. Could the old high now become the new low, like the stair stepping? Old high, new low. New high, could it become eventually the new support? Well, if we want to set a tighter stop, we're going to set it 145.93, less 2%, 143.01. Now that's a little tighter stop. If you said, I don't like to set stops that tight, well, we could take a look at the line we drew, 141.38, less 2%, 138.55. Now, if we actually take a look at this, 138.55, yes, dated GTC. We are using the lower support area to try to give some room, okay? Now, Scott actually says the semiconductors are now joining in. Remember, the semiconductors, they went up the most. They went down quite a bit. I want to say one, let me finish this and I'll say something on that because Scott's bringing up a good point. But the biggest actually thing is we're going to position size this. And if we did that, let's say we did on the margin account, 5,900. It's going to give us, now, by the way, we could change the account up there, or we could change that account to the margin account right there. Another way to do it. Remember how the stop works. If we go to that price or less, sell the shares, could be filled at a lower price, send the order, and it's sitting right there. Now let's go back to just real quick what Scott was mentioning of. We haven't said semiconductors. We said earlier the NASDAQ. Okay. Now, if we went back to just real quick the NASDAQ, okay, when you look at the NASDAQ, about 50% is technology, right? But if now remember the theme of what we're talking about is snap back rallies. And what we tend to believe is that what happened recently, that is the most important. Now, you got to be careful on that, because we could say, yeah, we recently on the NASDAQ broke support, and that's true. But we got to say, well, where could that change? You got to fill in the blank. Well, where this downward trend could change is, number one is, could the moving averages start to change color again? Now, remember, they've been painted red for just days and days and days and days. And red, and all that. That's why we haven't talked about it. There's been a whole lot to talk about. Okay. Now, notice that the answer is not changing based upon the chart or time. Okay. What is the first sign of trend change, right? Well, if we're talking about indicators, bullish MACD divergences, which we'll see on the semis in just a sec, or the short-term moving average changing color from red to green. Well, that did on Thursday. Second would actually be the moving average turning green, the lagging one, the 20-period moving average, and or the moving average crossing over, whichever comes first. And right now we see all three things happening. The 10-period moving average goes green, the 20-period moving average goes green, and the moving average crosses over. But here's where we actually have to kind of realize something, that it's now it's stuck in our mind that, hey, it broke down and I can't get myself to trade the signal. Why? Because they remember the drop recently. Okay. This is almost like practicing forgiveness, that we forgive the downward trend. Has anyone ever offended you? And sometimes the stock market can offend us, can it? We just can't get over that stop out, and it snaps back to the upside, and we just hold on to the grudge. Now, that's an interesting topic. Now, here it is. Snapback rally. Now, remember, does someone have to buy an individual stock? No. They might consider buying the sector, or they might consider just buying something that's trying to track the NASDAQ. If we looked at what Scott made mention of, if we said what type of candle, so we already were talking about the reversal setup on the NASDAQ. Second, what type of candle do we have here today? Type it in the chat. If we said, where do we see resistance on the chart? Type that in the chat. And then if we broke above that resistance, where might it try to go to? Well, first answer to fill in the blank is the bullish engulfing candle. That is also close above the high low of the day so far. The second fill in the blank was 28,847. And if we can get above that 28,847, we really see the midsection of the channel, 29,679. Now, here's what someone's going to say. Well, which stock do you think is going to go up? That's the point. The investor might say, I'm not even going to buy an individual stock, or I'm just going to buy the technology sector, or I'm going to try to actually trade something that is tracking the NASDAQ. Do not forget that. Okay, I think we always think someone has to do an individual stock. Okay, now, if it breaks up to there, path of least resistance, 30,000. Now, what happens is we hold the grudge, right? We can't forgive the recent downward trend because I got stopped out on some positions, and I can't get myself to trade to swing back to the upside because I'm holding on to those past couple stop outs. I mean, that's what happens, right? Now, what about the SOX? Okay. Now, if I look at the SOX, got to ask ourselves, the first time we ever maybe saw some divergence on the chart, okay, right there, that didn't pan out. It did not pan out. That was right here. Now, what I've learned is sometimes if that first one doesn't pan out, that doesn't mean the second one can. So, matter of fact, if we actually draw these lines, and I'm going to go from the high, 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 give me another one. Well, if now we connect those highs, touching as many as possible, we're right now kind of trying to make a higher low into the area of resistance. So, why are we bringing up Scott's point? Well, first off, Scott's a good man, okay? Second, aloha back to you. And if we take a look at this, we're squeezing on the semis. Now we've got to ask ourselves, has the NASDAQ been stronger or the semis been stronger? Type that in the chat. Now, TLS now says the SOX is not snapping back. That's my point. We cannot say that actually the SOX is stronger than NASDAQ. The keyword is so far. The SOX needs to get above, probably right at 11,671. The SOX so far is lagging the NASDAQ, okay? Lagging. Now, does that mean you can't have your eyes open and be watching those lines? Of course not. The reason why we're talking about it is you want to know ahead of time, okay? So right now, someone's probably looking at some of these tech stocks, but also understand that the higher up that tech goes, it wouldn't take a whole lot of understanding to know that the higher up the tech goes, semiconductors could be swinging back to the upside. All right, so TLS now, it's fair comment, but we just want to say at what point would the semis be starting to reverse? Now, let's also be clear, what stocks in the semiconductors tend to lead the semiconductors? And so you'd be watching not only the industry group, but saying, hey, is Micron starting to reverse back to the upside? Not yet. Is SanDisk starting to reverse back to the upside? Not yet, but it's at the diagonal line, okay? And some of these are coming right into the earnings, okay? So keep an eye on some of these bigger names, but I think we're on the same track, okay? Now, if we take a look at this, let's also go to just real quick some other stocks we kind of want to make mention of. Now, when we talk about the one that I did not make mention of is in the communication space, is Meta. And that is the one that, speaking of actually kind of what we've been talking about, right? Gap down, snap back rallies. Now, remember, on green candles, what is resistance? Type it in the chat. Well, if you gap down and it's a green candle, the resistance should be the green candle's closing price. And if you look at that, just know, and this is why I kind of posted about it on X, that should have been resistance. Friday, it didn't hold. Well, if we get up above that closing price, path of least resistance is where? Fills in the gap potentially where it came down from. Well, that's 585. Someone says back to us, well, it's already at resistance. We're not understanding what's happening. Whoever went bearish is now realizing I may be wrong and they could be getting out. And you got to ask the question, why would buyers be buying or investors be buying on a gap down? Because they're using the gap down in price as the entry to try to buy at cheaper prices, fully knowing they probably have enough ammunition of capital to create a potential wave of other investors that might try to get in. Now, this is going to be one that we're going to watch. Number one, can Google lead to the upside? Second, could Meta as well? And if all of a sudden, if actually Meta could come back up, could it start coming through these areas, these lines of resistance? In the current market and closing here, there is a clinic going on of gap down reversals, bullish gap down reversals. If you understand them, you've been actually obviously been having some opportunities here. And I want you to kind of be aware of kind of getting educated on this. And really what it is kind of more trading dynamics where you're trading from a line of resistance to the next level of resistance and so on, okay? I'm out of my time here today. We got Camera Made coming up next. If you enjoyed today's video, hit the thumbs up. Do not forget to subscribe to the Trader Talks channel. We also did a number of trades here today, and I want to make sure that you also are aware that you can go to Trader Talks, Schwab Coaching Webcast, and get our content on there. It's posted, and it's being broadcast via YouTube, which means you could be on your phone, an iPad device, or tablet, whatever, okay, which is always nice. You don't have to be sitting at your computer. Now, stay tuned for Camera Made coming up next. Also, don't forget about our upcoming events this month and next month as well. Check out schwab.com/events. Thanks again, Michael Fairborn, for answering those questions in chat. And thanks to all of you here as well for a nice, lively session as we talk about trading with technical indicators with a focus on gap down bullish reversals. Keep an eye on the NASDAQ. That's going to be interesting this week. We'll continue to talk about that, and we'll be here all this week. Have a great day. Stay tuned for Camera Made coming up next. Bye-bye.